You're listening to the Real Estate Runway podcast, powered by Quattro Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, everyone. Welcome to another episode of Chad's Soapbox on the Real Estate Runway podcast. I promise to do these more and more frequently. It's just been a little bit crazy doing deals and selling things and making people money, but I really want to spend more time with you, my listeners, talking through some nuggets to help those of you who are investors figure out who are the best operators to invest with by knowing some, key behind the scenes pieces of tidbits of information that can help you pick those people. And also from you operators out there who are listening and following Quattro Capital, you need to know how we do business and really how these concepts can help you better your business. Okay. So today we're going to talk a little bit about in all the tumultuous times that we're in, we could be talking about inflation and interest rates and all that. And I promise you we will. But today I really want to talk about telling stories to lenders. Okay. And I mean, not fibbing, sorry, not telling stories to lenders, presenting a story to a lender. So when I'm mentoring young groups and doing deals of my own and everything like that with Quattro, we come across a lot of individuals who just don't understand a couple of key concepts. For one thing, your lender, as an operator, your lender is your biggest investor. They are your biggest partner, right? For those of you who are raising equity, we go through great lengths as syndicators to really present the story to our investors. We go through great lengths of presenting the property specifics. We go to great lengths of presenting the area demographics, the rental increases, the business plan, why this is good for the community, all those pieces that make this a story, not just a pro forma. What surprises me more than anything on this earth is how a lot of individuals, a lot of people doing deals, a lot of big syndicators even, don't regard their lender as their biggest investor. And I'm telling you, that is a mistake. You need to treat them just like you would one of your private equity investors. And let me tell you why. So a lender, any given lender in the country, especially right now, is probably going to look at, and let's go down to that underwriter, probably at least 200 deals a week. Okay. He doesn't have the time to go research and understand your area and your business plan and know you as an individual. They will with time, the more you do with them. One of the challenging factors is they need to see your deal stand out, and they need to understand and have their objections handled before they have them. It's just like talking to an investor. They need to know that, hey, the property is not in a flood zone because I told you that. They need to know that, the property is moderate crime or low crime. It is not a high crime, dangerous area that's really going to be a problem for your business plan. So what does that mean? When you're presenting a deal to a lender, you need to go a little bit above and beyond. So we actually have a very, very specific underwriting model that we use and we've developed, and it has the ability to print out reports that we know the lender is going to want to see. So why not give them everything they're going to want, not more than they're going to want, but everything that they're going to want right up front so that you can make sure their questions are answered and you come across looking like a professional, right? So imagine if I'm a lender and all you do is submit to me your contract, the purchase price, a shoddy pro forma that may or may not make sense, and no background information to go with it, I'm not that impressed. You look like everybody else out there who's trying to buy a deal and get wealthy. So how do we do this? As operators, well, I'm gonna back way up. How does Quattro do this? Quattro Capital, we've built a very specific lender pro forma. We also use this for our investors, but we have different reports that come out of it. So the first thing I'm going to provide them with is, of course, a 10-year pro forma showing what our assumptions are projecting over, from in place, taking it to market, what is it at takeover, and then years 1 through 10. Okay. That is the macro scale document that you need to provide to the lender that's going to have everything from income to expenses to what the debt service looks like, what your coverage ratios are. You need to go ahead and calculate all of that stuff the lender's going to care about. Specifically, what is the debt yield? What is the debt coverage ratio? What is the leverage you're projecting? If you're doing a loan to cost structure, when do you draw that leverage down? All of that kind of stuff, right? So I think it's very important that at a very minimum, you provide this to them. Okay. The next thing you need to think about is, okay, analyze the rent roll for them. Build yourself a template that shows how you're analyzing the rent roll. Look at your averages by floor plan. Look at your cost per pound in rent, which is dollar per square foot, by floor plan, and then lay out clearly for them, what am I going to achieve in rent for a given renovation, or even if you're just renewing and burning off loss to lease, what am I going to get, in rent in year one, year two, year three. And typically, if you're working with a lender, they really care about year one, year two, and year three. Because after that, nobody can really project that far anyway. So, anyway, substantiate those rental numbers. Put together some rent comps and show them that you did your homework on the area and actually provide them what properties they should look at to be the best comparable for your business plan. If not, I'm going to tell you what they're going to do. They're going to go and take averages. They're going to take the crappiest properties in the area. They're going to exclude the good properties because that's conservative. And you're going to wind up with some, underwriter who says your business plan isn't viable because you didn't give them the right information. Okay. It's also a good idea to go ahead and pull some sales comps, just like you would for your investors. Show them that you're not overpaying for this property. Show them that and if you have nicer properties that have already traded at what your exit price is going to be, show them that. Just give them these data points to validate what you're putting on paper is true. Okay. And then I think the last point that I really want to make is model the debt part for them. They're going to do their own modeling, I know, but at least model out that if you're doing a loan to cost structure, if you're taking on bridge debt and you're planning on, getting some of your construction financed on a line of credit, go ahead and lay out the fact that at close you're going to be at, say, 65% loan to value because they're only going to give you that 65% up front on this loan structure, and then show that you have let's say another 15% in cost available that you can pull over time, and show, really important, be able to articulate monthly, on a monthly basis, okay, I'm going to take these units offline here. I'm going to renovate them. I'm going to bring them back online a month later at the new rate. And then I'm going to bill you, Mr. Lender, for the construction that I'm doing to pull from my loan. And it's going to hit here. They really like to know that their operators have a good understanding on not just the cash flow of a property, of a project, but also the cash. They want to see that you have cash management in the bag and that you're able, able and available to understand, when am I going to renovate? When am I going to take it offline? When am I going to market it, bring it back? And then when are you going to hit me up as the lender for the draw to fund your construction? So overall, it's really simple stuff, guys. I just cannot tell you how many times I see lenders getting frustrated when we put together pro formas and send them out, and they're just they're they're just second class quality, and they're not being regarded as an investor, right? So think about that. That will, if nothing else, that is going to take your business to new heights. And why is this relevant right now? I have 4 or 5 individuals that I'm mentoring who have come to me saying their lender pulled out. And well, when we go look at, okay, you haven't given, when we look at why, we realize, okay, yes, we're in some tumultuous times, but that lender had no reason to believe you were any more capable than anyone else they're working with to get this done. Why? Because you did the bare minimum to provide the lender what they needed. We have lenders we're working with in this time, even though leverage has changed a little bit, the interest rate has changed a lot of bit, they're still with us because they know how we operate. They know we're going to get it done. They know we will be in the trenches fighting until we achieve our business plan. And they have a lot more comfort going in because we provided them all of the information that I just told you. So anyway, this has been Chad's Soapbox. I really try to keep these things to 10 minutes or less. Looks like I'm right on the cusp of that. But in general, guys and girls and operators and investors, make sure your lender is regarded as the biggest investor. Make sure they're treated as such, and give them the information they need to handle the objections they will have before they have them. And I promise you're going to have much, much more of an easy time getting these loans closed than if you don't do this type of stuff. So anyway, this has been another episode of Chad's Soapbox. And until next time, over and out, friends. See you later.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.